Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of monthly support and demand and rejecting it to the upside aggressively. In fact, we can notice how this level in the past was acting as a quite strong historical resistance zone. Then the market with this impulse broke above the level, because what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. The market tested here that previous resistance turned support and is currently rejecting it to the upside quite aggressively. So from a monthly standpoint, everything seems quite bullish, and we could expect more potential bullish continuation to be created away from this level. So the monthly time frame seems quite bullish. Dropping down on the weekly time frame, what do we see? Well, from a strictly structure perspective, the weekly time frame here, it is in a perfect uptrend with the creation of weekly higher highs and higher lows. We just had here the creation of yet another higher low, so higher than the previous one here and also higher than the previous one here. We had the higher high here above the previous one. Now we just had a new higher high here, and the next logical step would be the creation of yet another weekly higher high. So the weekly time frame as well here for this pair looks quite bullish. We can also notice that from a pattern standpoint, what we have here is a clear impulse to the upside followed by a correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg, and we can see how we had a confluence of support area given by the 0.32 and 50% retracements inside here. And inside of a confluence of support zone, you would expect to see more institutional longing. And we will be speaking about institutional longing later on in the video when we move to the commitment of traders analysis. For now, let's keep in mind that the market clearly it is in an uptrend from a monthly and weekly standpoint and drop down on the daily time frame. Now, from a daily perspective, first of all, I definitely spoke about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move higher. Then from here, I made another breakdown explaining all the reasons for which we could expect this push to the downside. And from here, I made another breakdown explaining all the reasons for which we could expect this rejection to the upside, which again is exactly what the market just gave us. And by the way, I will link in description all those previous analysis so you can go and check them out for more free education. However, for now, let's continue with our analysis by going and seeing what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, if we check the data precisely for gold, we can see how lately with the last reports, net positions have been increasing. We went in fact from having 131.1k net positions all the way up to 204.2k net positions, meaning that institutions with the last reports have been moving back to the bullish side for gold, increasing their longs from 211k all the way up to 278k. So clearly, institutions are already longing gold, and price already clearly has reacted to that buying pressure from an institutional perspective. Now, let's keep in mind that, and let's move back to the technical aspect of this market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, what we have right now is a break above daily structure. In fact, this zone clearly was acting as a quite strong level of previous daily resistance, acting as resistance here, and again here, and now this level has been broken to the upside. So all the previous resistance is now turned support at this level. We can also notice that from a pattern perspective, we have a strong impulse. And after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 50% and 0.618 Fibonacci retracements aligning up exactly with that previous level of previous resistance now turned support, which means that actually we have confluence of support in this level because we have both the Fibonacci levels and the horizontal support, both lining up in the same area of price. And what we said previously, if you remember, is that when we have a confluence of support, there is increased probability of seeing institutional longing. And in this case, since we have already seen that institutions are already longing, we have even more probability of getting more institutional longing inside of this confluence of support, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if the market will correct to this zone, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked directly in the description of this video. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program. As soon as you open the website and scroll down, you will see that there is a complete video presentation of exactly what is included, which is essentially everything. In fact, you have the possibility to gain access to all my courses, so risk management course, day trading course, swing trading course, MQL4 programming course on automated trading. Also, you have the possibility to gain access here to all my softwares, starting from the COT data software, which is the one that we have used in this video. Also, the Trading Station software with Telegram Signals integration, which essentially puts together everything that you need as a trader all in one interface. You can also gain one-on-one private mentoring directly with me. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility directly from the website to apply and start your journey to enter this incredible program. So I really suggest that at least you go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.